Welcome to Lickin' on Lending, the podcast that dives deep into the heart of the mortgage industry. Your host, David Lickin, bringing you the latest insights, trends, and updates from the world of mortgages. Whether you're a seasoned industry veteran or just getting started, this show is your go-to source for all things mortgage. Let's get started. This is Lickin' on Lending. Now your host, David Lickin.
Listeners, it's a real treat to have Dr. Rick Roque joining us. Rick and I have known of each other and our paths have crossed for years, but we finally met in person. And boy, what a treat it was. And we met at the New England Mortgage Expo up in Connecticut. Rick, thank you for joining me on the podcast today. Real honor to have you here, friend.
David, I love being here. I appreciate it. I'm amazed at how many intersections we've had in common friends and people over the last 25 plus years. You've certainly been in the business longer than I have, but you've been a fixture for as long as I've been in the business. So I find it amazing that we were able to, that Greg Scher was able to put us together at the.
I love Greg, and we'll weave Greg into this story here
Oh,
in just
yeah.
a minute.
Yeah, of course.
Greg is such a dear friend, and I'm so glad that you guys connected because it seems it's a recipe that's really working well for both of you, and I'm excited to get into that in just a little bit. But I want to talk a little bit about this, about your doctorate degree. I did not know that. I guess how you read, you gloss over those things, but tell us about your doctorate degree.
Yeah, I did my research was on public and private partnerships. So it hinted on the GSEs, but it went much beyond that in ways that government can make investments within the private sector. And then there's reciprocity. The private sector would equally invest in various public related goals. And so it was to establish non-traditional revenue streams through these public and private investments. And it's been an interesting vehicle to research ways that, like in other markets, obviously Fannie, Freddie, and Ginnie are a public and private partnership. It's a private
Right.
institution with various public guarantees and public investments in to ensure the success and stability of that entity. But back in 2010, I was involved in a project with the World Bank to establish a liquidity facility in West Africa. So we worked with the IFC, the World Bank, and various countries and investors in New York to pool together like about a $200 billion fund to help take loans and mortgages off the balance sheets of banks and lending institutions specifically for the purposes of achieving certain home ownership goals. I mean, you can get a mortgage in Africa,
And you're doing that
but
in Africa. So
yeah. I had a 5-year work visa where I was traveling back and forth to West Africa to try to stimulate some way of creating a vehicle to take, because home ownership in Africa, in West Africa especially, is 0.5%, 1% or so, and you can get a mortgage loan, but you need 50% down. Rates are 30+%. You got to pay it back in 4 years, and if you don't, someone will probably kill you. You know what I mean? It's truly a hard money Wild West
takes hard
scenario.
money to another level. When you don't make it pay, the collector comes with a gun instead of a.
Oh, for sure.
It's
I incorporated my research in a lot of that to try to find different ways of establishing what I called like non-traditional revenue streams. It could be for, like I said, liquidity facilities. It could be for higher ed institutions trying to figure out ways to level off tuition and not have to always increase tuition to cover the costs of the organization.
You're a veteran. It's fun to get a little insights of your background, but more recently, you've been really known for your M&A activity. You founded a company in 2009 called Menlo. I think it's important for confusion to understand how that works, especially now that you've teamed up with our good buddy Greg at NFM, and talk a little bit about that. So as people read different posts over the years that you've done, and then how you're transitioning into with NFM.
Yeah, it's interesting. I've done interviews. I've spoken at probably 50 or more conferences over the last 10 years or so under the brand of Menlo, because I started Menlo with a lawyer friend of mine in 2009 in Menlo Park, California. Right?
Okay. That's where the
And
Menlo name comes from. Okay.
yeah. I did grad work at Berkeley. He was at Stanford, and we did a happy medium and decided on Menlo. But the real main focus at that time and then the evolution of the business was from 2010 to 2012, 13, it really was warehouse line. We had relationships with warehouse banks where we would do financial due diligence on mortgage companies. And then we would get a small sort of haircut on the volume, on the correspondent volume that was leveraged against that
Okay.
warehouse line. And then in 2013, really on, mainly 2013 to probably 2019, it was heavily involved in technology migration. Ellie Mae was a close client of mine. I know you knew Sig and
Yeah,
Jonathan and Joe. And
yeah.
so I literally did the roadshow with them, helped them create the actual investors book that they took to Wall Street to kind
Wow.
of pitch the investment deck. Because I was, previous to Menlo, I was an executive at Calyx. And I knew all the companies in the country that were 50 loan officers or more, and I worked with Ellie Mae to help. We did a roadshow together in all the major cities in the country, engaging with Kayla's customers and moving them over to Ellie
Man.
Mae. So that was a big part of it. And then as I got deeper into mortgage companies on the technology side, and ultimately on the consolidation side, it always ended up being like everyone wanted to grow, but they didn't really have any sales systems, or they didn't have the capital or the liquidity to grow. So I began to understand like the inner workings of what is the recipe for growth? Why do some companies grow and why do most fail to grow? But PureMI was a really good client of mine back in 2009, 10, 11, 12, 13. And I helped a company go public, a company called Prime Source Mortgage back in, I think
Yeah,
that was
prime
in
source.
2011 or 12 with
Yeah,
with Jeff Smith. And I've had my hands primarily just in growing mortgage companies at a pretty on just a national level. How do you get what I call the ditch? How do you get mortgage companies out of the ditch, out of their local geography, and how to
yeah.
extend them beyond that? And so that was all under Menlo. And then I changed that when I was W-2 at Cross Country. I worked at Cross Country for about a year and a half,
That's right.
heading
I
up their
remember that.
partnership strategy. And then I transitioned over to NFM as a W-2 sort of leader, um, focusing on new production growth. I still have some companies that I advise and that kind of thing that have been long-standing, 10-year plus relationships in the business. But my full-time dedication and focus is really, and my objective is really to help NFM, especially just to grow.
Yeah.
Because
You've worked with a lot of these companies,
yeah,
and
yeah,
I have over the years, and I work in a slightly different aspects of it. Yours been really in production growth, and you've been very successful at it, especially when you were at cross country and you
yeah.
helped them grow. What's the number that you helped them grow by? Was it 4 billion?
Oh no, that wasn't cross country. My main production contribution was Lend US. I would say
Oh,
when RPM and Rob was probably one of the most fascinating mortgage figures in the business as a pure just mortgage strategist. He probably was the best strategist when it comes to aggregating production and growing at a
right.
large scale. Just from a professional and a mortgage perspective, he was an incredible thought leader. But but no, we added just shy of 4 billion in production through acquisitions around the country in the Midwest, the Northeast, the Southeast. And that was from 2000, really 15, end of 14, 15 to 2018. My function at cross country was different. Like I would engage with companies like Target, right? And say, hey, Target, why don't we establish a relationship where we could, and these are groundbreaking kind of relationships. Like nobody
Yeah.
in the industry has
Affinity
these kind of
relationships. Yeah.
relationships where we could say, look, you promote cross country or you promote the mortgage lender to target members because they have 100 million or so red card members, and then in turn you promote us as a lender to we'll promote your products to our customers and you promote us to your customers. And that was a pretty fascinating enterprise. It showed, I think, a lot of opportunity in the business for the right mortgage companies to tackle those kinds of projects. And it shows really the other side of it is that mortgage companies are really good at doing mortgages, and they tend to always struggle when they go outside of the mortgage lane.
Yeah.
When you
Yeah.
get into homeowners insurance or you get into other types of products, home
Oh,
warranties,
true.
everybody has tried all kinds of different ways of making money. And but I would say even to this day, Better does a great job at this at a mid-tier level. Better is about a 2 billion, $3 billion company, but from an origination standpoint, but they've done a really good job in vertically integrating the homeownership experience. But there's a but most companies just fail at that.
They do.
It's amazing how much of a struggle it is because
Why do you think companies struggle to grow, Rick? What's your experience on
yeah,
this? I have
yeah.
my theory on it. A lot of it comes down to leadership. I think the structure can have a factor. Culture certainly has a lot to do. But what's your observation as if
You
you
know,
were having all the CEOs of mortgage companies sitting in front of you in an audience, what would you say to them? These are the things you guys need to adjust and change in order to grow.
the first thing I would do if I had an audience of CEOs in front of me is I would carve the room up based on the size and scope of where they are. Because NFM growing at 7 to 8 billion to 10 billion is a much different sort of strategy than if you're doing a half a billion and you're trying to get to a billion. Because there
Yeah.
are things that NFM did to get to a billion that it simply wouldn't do today. And part of that is just that's the luxury of size and scope, right? When you already have some size and scale, you can be a bit more strategic and thoughtful. You don't have to necessarily be all things to all people. You can be more selective on the production that you attract, that you want to retain, or that you want to target, right? But so that'd be number one, is I would separate the room in production categories.
And tranche it out by production levels.
And the second thing I would say is that for whatever your goals are, going from 300 million to a half a billion, or half a billion to a billion, or 1 to 3, or 7 to 10, or even if you're a $30 billion company and you're chasing Rocket, you have to make sure that once you identify the path where you want to grow, that your internal like leadership systems and priorities really support that objective. And let me give you a clear cut example. I had a company not so long ago say to me, look, Rick, we want to grow in Louisiana. And but we only want to recruit people doing 2 million, 2 million a month or more, right? And the reality is, in the state of Louisiana, if you really segment the data out and you take the depository loan officers out because they're depository, and for the
Right.
most part, IMBs don't like to play in that space,
Right.
with some rare exceptions. But for the most part, we don't recruit from depositories. Um, and then when you take the brokers that are in Louisiana out and say they're a wild bunch, difficult to tame and bring them into the independent mortgage banking route, and you just focus on the non-depository IMBs for loan officers who actually live in Louisiana, not the rocket loan officer who does 36 million a year in Louisiana, who lives in Detroit, but somebody who lives in Louisiana, who works for an IMB and who is licensed. You narrow that, you whittle that down to a very narrow scope.
Dramatically,
Okay.
you whittle that down.
So you look at the
Yes.
number of people like in Louisiana that does 24 to 36 million a year. There's only about 40 of them. There's not many. There's not many. And so the
Interesting.
point is, and when you look at the 40 of them that they are, there's Lennar, there's DH Horton. So that takes those guys off because they're captured kind of business.
Yeah.
And then there's a handful of the top mortgage companies like your Fairway, Cross Country, and so on that really have those guys locked into some kind of transition clawback kind of guarantee. So
Right.
really, when you look at the eligible numbers,
To
when
go
you
recruit.
say I want to 24 to 36 million a year people only, Rick, you're dealing with 13 people. That's it, right?
Isn't that
So
amazing? And so, what I love about what you're talking about here is, which is, I believe, so many people are missing today, is business intelligence. Because
yeah,
when you really start segmenting and start looking at things, we have these lofty goals. We have goals. I want to go this much out of this market. You look at a top line number, and they don't pay attention to segmentation of
yeah,
what is really the target that you have available to you. So I think it's very
yeah.
intelligent. I applaud you for that. We go in
Well,
and segment the markets all the time.
And,
What are
and,
some of the
and,
other,
and
and
people
then,
don't lead that way. That's the
yeah,
challenge. Nobody, like, very few companies lead that way. And that's frustrating. You'd think people would look at that because it's so common sense, but
yes,
people don't. They don't understand the market. They just say, well, look, Rick, we want strong producers in Louisiana. The loan officer I have does 600,000 or 6 million a year, 600, 5 to 600,000 a month, right? No, forget that. I don't want that person. It's that person does $186,000 a unit. It's a
yeah,
hundred
the right
percent
amount.
Govy,
Yeah,
100% Govy, and that
which is
person's
the
going to
most
bring
profitable
in.
business there is in the market.
Yeah, but it's so easy to be like 186,000. That's terrible. Let's not bother with those people. It's no, you're a fool. You're a
Yes.
fool if you don't understand. You're making these whimsical judgments without understanding the
Well,
market,
that's so
right?
good. That's
And
so
it's
good.
just, it's so
I,
foolish.
I could sit and dwell on this one point you're making forever, because it's one of the points that I keep screaming out to my clients is, let's really go in and look at the market and the segment it and really look at who's are the participants, who are they
Yeah.
working for.
Look, you look at a company like Flat Branch Home Loans right in the Midwest. They've
Yeah,
done a masterful job being a mid-market lender. I call it, they're a flyover lender, right?
yeah,
Everyone wants the coasts and high unit values on the coast and that kind of thing. And there are a few companies that have done such an excellent job as a company like they have to be really strong in government business, and they know their niche. They know that they're going to be the mid-America lender. They may not be a top 10 lender ever or top 20 lender ever, but they're going to be very profitable, very stable. Jim Yankee, just a phenomenal guy who started that company. But that's what I'm talking about. It's like he had a strategy that I'm not going to be a $30 billion lender. What I want to be is a 3 or 4 or 5 billion dollars, probably a $2 or $3 billion lender, predominantly government, and I'm going to serve these borrowers well because these are my neighbors. That's a strategy that he's executed really,
And
really,
it's
really
such a
well.
profitable strategy. That's anyone who focuses. I want the. You're just focusing on top line
Yeah,
numbers and the production. You're missing so much of the. You're really stepping over
yeah.
huge amounts of very good revenue in that. And audience, both Rick and I are hacking away here, coughing as we're talking. So
I know it's
at least I
February.
feel like I'm kindred soul here with you as we're doing this
It,
together, both
it's
dealing with these
February.
gold issues. And then we could go on and on in this point. One of the things that I want to ask about when you're recruiting, when a loan officer, are loan officers more intrigued with culture, the comp package? What is your experience? What is the biggest draw card, and the from a drawing standpoint or a turnoff card? I mean, what turns
Yeah,
them on
I
and
would
off?
say there was a study. There was a study a few years back. Forget who actually did it. That actually analyzed. They did a wide study of loan officers and why they make moves and what mainly drives them. And I think it was Flowify. Maybe they did it. I think it was a POS company, but it's you don't leave a company, you leave your manager for
That's
without a
exactly
doubt.
right.
And typically the company fails the manager, then the manager fails the company. But truly, even if you have a great company, it could be a top 10 lender, top 20 lender, if they leave your organization, it's not because you can't close loans, because you can. It's not because you don't have a wide array of products, because you do. It's because you have a real jerk of a manager who's not listening, doesn't ask questions, is quick to judge, doesn't make time for you, is really egocentric, doesn't really zero in on you in a real
And
empathetic way. I was talking to a loan officer a few days ago, and his mother passed away, right? He's a Cuban fellow, just close, just culture that's super close to their mothers, as most are, but some cultures,
more so than other, Cuban is very much more so.
oh, loved his mother, right? His apps went down, credit pulls went down, so on. And of course, his manager and his manager's manager were just berating him about what's going on. Like, why aren't you answering your phone call? Where are the numbers? Where are and there's no,
No
ask the,
empathy.
ask the
No,
question first. What's going on? Like, this
yeah,
isn't like you. You're typically a pretty good
that's a great
producer.
question.
I've noticed you. And all of a sudden you're dropping off. I'm not going to accuse you for leaving, or are you sandbagging loans? Are you going to leave? I'm going to say, hey, you know what? What's going on, man? Something
That's
doesn't seem
such a
right.
good point.
Right.
I'm thinking of one of my clients right now who had a particular manager, and that was exactly the scenario.
Yeah.
And it escaped the executive team on what this, because this manager, which was toxic to parts of the organization. And it's one of those things. If for someone, what would be the tip you would say? How do you find and identify those managers that are causing people to leave your organization that you really should hold on to? What are the things, what were the tips you would say for creating awareness of those individuals? Any thoughts?
So are you saying if like at NFM, like
If you
how do
own a
I,
company, if you own a
yeah.
company or you're a production manager and you have a manager you are not, you believe in, and you find out has got toxicity as because of people leaving, is there ways that you can discover that more quickly?
As a loan officer working for that
But
organization?
no,
I
as an
apologize.
owner, most of the people
Oh,
listening to our podcast
as an
are
owner. Yeah.
owners
Yeah.
or executives.
Um,
That's who our audience is of this podcast.
I would say the big thing is, look, what corrupts executives and owners, or what's really not, I don't think corrupts, but what really dulls their sword is really money, success, pride, and ego. Because especially I'm 51 years old, and I don't run as fast as I used to. I don't jump as high as I used to. But it's like we all have to fight and resist that sense of being comfortable and falling back. I'm not saying you don't let people lead and you don't let your leadership manage,
Right.
but
Right.
once you lose touch with your top producers and your loan officers out in the field, when you're not picking up the phone and just calling and saying, "How are you doing? What's going on? How can I serve you?" Is there anything I can do to help you grow?
Servant
Um,
leadership. Yep. Yep.
I'm just telling you, but people don't do it, David. They don't do it. They
I
don't do
mean,
it. They get comfortable. And the pro,
listeners, I hope you're dialing into this because I'm seeing this. Rick is seeing this.
yeah,
And we are the guys that come in and try to work with companies. So Rick is now working with NFM and he's recruiting people in and he sees this. Pay attention
yeah,
to this one thing. I could go on and on this because it's one of my passions to help
yeah,
turn things around. People don't quit companies, they quit bosses. And that is so true. And for those
yeah.
of you that are originators listening to this and you got a toxic boss, speak up. Speak up.
Without a doubt. And the problem is, like, there was not too long ago, I had a working relationship with a company that I would say that was extremely toxic. And leadership tends to like lead by fear and tends to lead by if you ask questions, you're made to look to be stupid and you're made to be and you're intimidated and it's quickly turned against you and not maybe asking more thought-provoking questions around maybe maybe you're right. Is there something here that we're not seeing that you are seeing? I'm astounded, David. But the problem is money and success just tends to inflate people's egos. And we've been in this business long enough where we've seen the the rich and the broke scenario, that peak and valley scenario that people have that we all experience to some degree at some point in time of our careers. And we got to be humble, man, because we could be at the top of our game, making good money. You're making 30, 40, 50, $60,000 a month or more, whatever. And then, and you can almost tell people on a good run by how they treat other people.
So true.
And then all of a sudden, a few years later, things change. And then that person all of a sudden is making 9, 10, 12, 14, $15,000 a month, whatever it is, right? And their tone changes. And all of a sudden they'll answer your calls or all of a sudden, and I tend to not be spiteful, but I tend to point it out. I tend to say, hey,
Yeah.
do you remember when you treated certain people a certain way? Because when times were really high, times were really good. Remember that. You
So
got to
good.
remember that.
So good. So good. Again, I could go on to this topic for an hour. I
Yeah.
want to get into another topic with you. You and I both have seen what has worked as loan officers for top performing lenders and MLOs. What do you see the new lender in, let's go say 2020, 2030, just a little bit out here in the future? What do you see the lender look like? What does the mortgage loan originator look like? Give us your insights
Yeah.
into that. Doc,
Yeah.
and
No.
now I'm going to tease you playing on the
Yeah.
Dr. Rock side of you, your
Yeah,
analyst.
no, honestly, and I have to applaud NFM for a lot of the stuff that they're doing because I think what NFM is doing, certainly not absolutely exclusive to the other 28,000 lenders out there, but there are very few lenders that are doing with what I see NFM doing, and that is the future of the business is going to be hyper digital. It's going to be hyper personal.
Yeah.
Okay. When David Licking calls me for a loan, he may never have done a loan with me before, but I'm going to have a digital intelligence stack. I'm going to have information that's going to be front loaded about David Licking that is going to be able to educate me and even maybe provide me with a real time script of his family, his divorces, or whatever, and the number of homes you've owned, what your current home that you're in,
Yeah.
all your personal data in the very first conversation, right? So that way I can immediately fast track. I call it the velocity of decision making and the velocity of
Yeah.
relationships. So by 2030, it's going to be hyper digital. It's going to be hyper personal. I think there's no question. I was actually having a conversation last night with a professor at MIT, and he was saying to me, Rick, people, the public feels that AI is just going to be this kind of supply chain, blockchain kind of fad. It is here to stay. It's going to replace podcasts like this, where we could upload. We could actually type in, do a 1 hour interview between David Licken and Rick Rock. And here are the questions that I want David to ask Rick. And there's going to be enough information about David, and there's going to be enough information about Rick, where we can hit
Yes.
go, and then they'll create our
Persona,
visual,
our
our
voice, our
everything,
absolutely.
and they'll have that conversation, and it'll be so acutely specific to us and our styles and our thinking and our track record that we won't even have to do this live.
I know.
It's to me, we're gonna have Dave Savage, God rest his soul, in the future. He will be one day. He'll no longer be with us, just as you and I won't be either.
Yeah.
Dave Savage has a potential to live for the next 150 years or longer in this business because he's got thousands and tens of thousands of scripts and interviews and things that an AI model could 100% know who Dave Savage is and
Yeah.
be able to coach loan officers 200 years from now.
Yeah, we're using a product called ELO GPT right now. They're having to change the name because of the GPT part of it, but ELO. And what's really interesting, and where they use that in 11 labs. They had 11
Oh
used
yeah.
11 labs to go in and mimic my voice, memorize my voice. They went to the
Yep.
super high quality of it, and then they used ELO to go out and analyze a number of my podcasts.
Oh yeah.
I'm looking at a leadership podcast. I have another podcast out there called Looking at Leadership. And then it came back and used my voice and created a script and read it. It sounded better than me.
Yeah.
I'm going, holy cow.
Yeah.
There's so much, we're on the precipice. So what you're talking about is the loan officer or the mortgage company of the future is got to take advantage of these new AI tools that are coming
As
down
long
the
as
line.
my AI persona could produce me with a little bit more hair, a little browner, like less wrinkles, I'm going to be golden for a very long time.
Yeah, yeah.
But
It,
I would say so. The future of the mortgage lending space in 2030, um, and I give Christos and I give Greg Scherer like an immeasurable amount of leadership credit around what they've done to align because when people will often criticize Greg or will scoff at Greg of being like this online personality or this online and they're fools to do so because he has established a way where people can get to know Greg, people can know, or even myself, right? People can get to know us on a very meaningful level, on a very scalable level, on a very personal level through our social sort of involvement. So that when we have conversations with people at conferences, they talk to us like they're our best friends. Like
yeah.
because they've been watching us for years or they've been reading our
Yep.
content for years. And and so recruiting is about who you attract, not so much who you call and engage, right? It's all about who you attract because then if you put
The law of attraction is
your,
so true.
your thought leadership out there, people are going to come and find you, and people are going to want. They're curious. We're curious creatures. We're going to want to know about who is this person, and the more content they receive, the more familiar they'll become. And so NFM has really done an incredible job of
Yeah,
developing like seriously next generation AI to where the loan officer is far more organized than his historic predecessor,
yeah,
far smarter, a far better and knowledgeable product expert, a far more familiar person to where when a consumer lead comes in, you have all this market knowledge. Because right now, like if like you and I ran into each other and we're like, God, I have Dan Licken's number on my phone. And why is that? And where did I run into your
and for
brother?
listeners, man,
And
that's my brother. My
yeah,
brother, 3 years younger than I am, and he's a consultant, but not in the mortgage industry. And I go, why do I have your
yeah.
Dan Licken? And it struck up a whole conversation about that, of how you
But we
connected him back in your Calyx days.
But we'll have fuzzy brains, right? We'll be like,
Yeah,
God, we're trying to figure out place this.
yeah, yeah, yeah,
Where
yeah. You
AI
bet.
will immediately connect those dots. We'll immediately connect those dots and front load that information to a
Yes.
point where when I was meeting with this MIT professor last night, he had a pair of those Facebook Google glasses, and
Yeah,
they looked like regular glasses, and they were
yeah,
his bifocals, but they were the Facebook glasses where he knew who I was because he could
yeah,
press a button and it analyzed who I was. It brought up my Facebook profile, and he could see it in his glasses on who I was. And he was showing me how front loaded the information is. And so he knew so much more about me without even asking me a single question.
yeah,
That's the
yeah.
future that's the future of this business.
I,
That's the
I, and
future of this loan as being a loan officer and running a mortgage company.
I love that, especially at 74 years old, where some of my brain cells aren't quite as well connected as they used to be in remembering
Yeah.
someone's name and remembering the details. I have an amazing memory, so I do remember a lot of it, but it's really quite, it's such a powerful tool to enable people on the relationship and connection side. You've done a really good job. You speak at conferences all over the nation. You're one of the most connected people on LinkedIn. What do you think is your appeal, Rick? I think, I'm asking this not just for our audience to hear what yours is, but it's so important that everyone recognize they have a unique appeal. And no
Oh,
one
yeah.
else has your fingerprint. No one else has your iris. So we got to quit imitating what others in our effort to become more successful. I've become so comfortable with who David Licken is, his flaws, his mistakes, his misspeaks, and all the things that I have. But I have found it, and I found that there's a group of people out there that really enjoy who I am. And when I
Yeah.
can connect with them and I can be authentic. So let's go back to the question. Who is Rick Rock, and what do you think is your appeal, Rick?
It's it's a thought
And then help
it's a thought
help our
provoking
audience
question.
find what theirs is. How would
Yeah.
they how would you help coach someone to help find theirs?
I just spoke at the tri-state mortgage banking conference, Vermont, New Hampshire, and Maine. It was such a great corner block of the United States, and I spoke about how important it is for people to get their voices out there because everyone has got something to contribute, right? When you're head of Kennebunk Savings Bank in northern Maine or something, or at North Country Federal Credit Union in Vermont, there are very unique experiences that are unique to Vermont, that are unique to Maine, but you go into it thinking that it's unique because it's unique to you and your experience. But there are people in West Virginia, there's people in Spokane, Washington, there's people
Right.
in Eugene, Oregon, there's people all around the country who will connect with that mountain river flood that wiped out a lot of Vermont towns that happened about a year ago. In talking about the disaster recovery and how you served homeowners, how you helped them, how you plugged them into FEMA, how do you get people into SBA loans and so on, are pretty relevant to the people in Asheville right now, or in Western North Carolina, or
So true.
people are very relevant to people in Oregon. But a lot of people, especially my age and older, we tend to say, "Hey, social media is a young man's game. I can't. I'm awkward." And I almost feel like the more awkward you are, the more authentic you come across.
I think so too. I
And
agree.
if you can
Don't polish
struggle
it.
across that, your
Yeah.
mass appeal is high. It's sometimes people who come across as the slick Willie, totally polished individual, people just feel like, I don't know. I don't know if I trust that guy, right? So I would say that my appeal tends to be, look, I'm a father. I have 7 children. At this time of my life, I tend to be very transparent about my weaknesses, the areas of success. I've grown a lot of companies in the past, and there's companies I wasn't able to grow. It either was a failure of my leadership, or just a failure of lack of alignment, or a failure of the company's leadership. But there were certainly instances where I was not able to help them get to the next level because of one of those 3 or 4 reasons. And I
But
don't exclude
on the
my own failures from that.
Yeah, one of the things I want to applaud you on because there was a couple of companies you moved through quickly before you joined
Yeah,
NFM. And I think one of the things that I applaud you for is when you recognize, Rick, it wasn't going to work, rather than through pride and stubbornness, you try to hang on to something that is destined to fail.
yeah,
You recognize it and you're willing to make a change. And
yeah,
so I really applaud that. And when Greg
yeah.
was considering bringing you on, he and I had numerous conversations about you, some things that I challenged him to look into, and he's so glad he brought you on because it's actually working really well.
Well,
And
no, I appreciate that. Look, Greg he's a frustrating mentor, right? He's a guy that frustrates me at times, but I know he frustrates me in the right ways,
because he's
just for
got your
just
best interest at heart, he
my own
really
growth.
does. Yeah, he
Yeah, no,
wants. He's
he's a special guy, and he's so much. I didn't know his father, but I feel like I know his father through just getting to know Greg, because he feels to me like the chip off the old block, where just from the little research I've done on Greg's father, super like likable, amiable, really well known guy, household name throughout Baltimore. And you got this Greg Shear kid who's trying to live in his father's footsteps, right? And you can never do that, right? When you have
no,
a guy who knows Oprah Winfrey like his father did, those are tough shoes to fill. And I feel like Greg in his 50s now has really developed, hey, I have a purpose. My father had his purpose in his global audience, which was Baltimore, right?
yeah,
I have a purpose in this global audience called the United States housing industry, real estate builders and mortgage professionals, that for whatever reason, he's succinct, he's smart, he's funny, he's up to date on current events. He's able to really pull together the right combination like his father did and create an amazing platform. He touches like 5, 6 million people a year.
I
It's
know.
mind blowing. There's only 400,000 people in mortgage, and he touches 5 to 6 million people a year. This guy is not even touched this guy has not even touched is what he could do as a leader, as a voice for an entire industry, and
It's
a voice for 5 to 6 million homeowners across the United States that purchase homes every single year. I'm telling you, this guy is so out of this world
It's really
talented. It's hard to even quantify.
Yeah, and David, there's every once in a while you run across people you meet and you go, "Wow, there is a unique gift that
Oh yeah,
it's like a stone. You just want to polish it and polish it." And I have the privilege of speaking into Greg's life now as a senior citizen. I mean, a chance to
yeah,
mentor him, which was a real blessing. But it was David Stevens that pointed it out. He says, "Look, and
yeah,
after I'm gone, pay attention to this guy." And so I'm so glad that David said that because now we have Greg and I have a great friendship, and now you're a part of it with the
yeah,
family. Let's talk a little bit about your passion for home ownership. It
yeah,
really motivates you. That's one of the things for me while I'm still doing this. It comes back to the first mortgage loan I did
yeah,
51 plus years ago. And I got someone into a home that other lenders had turned down. They've been turned down 3 times. And I got them in and I saw the transformative effect it had on someone's life. That's what's hooked
yeah.
me in and kept me in this industry these 51 plus years. What is it for you that has done it?
To be totally honest, it's a fairly personal kind of story. I'm the youngest of 8 children, and in 1978, my brother, who was number 7 in the family, my brother Tommy and I were playing in the backyard, and he passed away. It was a tragic accident. I was
Oh,
5, he was 9, and we were playing in a rope and doing Tarzan in the backyard, deep in the woods, and he got tangled in the rope, and he ended up, breaking his neck and fell to the ground and
oh,
died. But my father was he was a military guy, but in any time of a family emergency, my mom had a cowbell that would ring the cowbell to bring everyone home,
yeah,
right?
yeah.
So if you have eight
They're scattered
animals
all over the neighborhood. Yeah.
scattered all over the neighborhood, you just ring this cowbell, and that was time to bring the Rock kids home. And when Tommy, I ran into the house because I was a bit afraid of what had happened, but I didn't really understand the fatal nature of what had happened. And so when my sister was ringing the cowbell, everyone came, and we always met at this rock. Well, we met at the house, but there was this big boulder in front of the home that in the time of any kind of fire in the home or any kind of trauma, anything that would happen in the home, we'd always meet at the rock, right? And it's
How
ironic because my
appropriate
last
with
name is
your last
Rock,
name.
right?
That's appropriate. Yeah.
And so my sister was ringing the bell, and my brother comes home from football practice. My other brother comes home from work, and like everyone's coming home. And the one kid that didn't come home was my brother Tommy. And so as the hours went on, the panic just went on. There's no cell phones. It's just a really difficult. It's evenings. It was October of 1978, and so she rang the bell just which meant everyone get to the rock. And that was like my mom had different bell rings around. Like there was a casual bell, and then there was the emergency bell. Get your ass home now. There's a problem. You need to get home. Rang the bell. He didn't come home. And I just remember standing around that rock with my siblings in Catholic family. We're praying the rosary. There's 10 of us, my mom and dad, 8 children, but there was one missing. So there was one bead missing of the group. And I'll just never forget that. And that to me is synonymous with home ownership because that changed our home ownership dynamic forever, right? And it was so hard, but so much was attached, so many memories of my brother Tom in that home is inextricably linked to the childhood home that we all grew up in. And so yeah, it's funny. My father retired military, and then he went into real estate and mortgage, and then when he sold his business, I remember saying to my dad, saying, "I just never want to be in mortgage or real estate like you were." And in some ways, home ownership really rings with a lot of people, whether you're a black family that's never owned a home before, and the
Yeah.
idea of wanting to own a home has a real special ring to it, or you're a Latino immigrant that always wanted the American dream that you've always read about and heard about and seen in
Yes.
movies. You come here, it means something to them. And I would say home ownership is a very personal sort of
Yeah.
ambition. And that's why I've done it.
It's running to the rock. When you have the
Yeah.
rock, you have that rock, or metaphorically speaking, that place
Yeah.
of stability, that place of anchoring. And there's just nothing quite like it. And it does bring so much stability in the best of times and the worst of times.
Oh,
And
yeah.
I think it's really exciting.
Yeah. Yeah. So that's what. And I don't know if I've ever spoken about that story on social, but I will say that I tend to be fairly personal in my. I always try to keep it business oriented. How
Yeah.
do I link personal stories to how to become a better leader, executive, CEO, head of production, or loan officer to your clients? Um, but I think if you're all business speak and you don't necessarily convey a sense of transparency about who you are as a person.
Yeah.
That I think that you're really missing out on the way that people could connect with you that they otherwise would if they really got to know who David Lincoln was in his heart and what motivates him at an age where you could be fishing in Minnesota somewhere versus doing what you're doing, right? Because you don't have
Yeah.
to do what you're doing, but you do it
Right.
because it gives you a sense of satisfaction and longevity to your influence that you undoubtedly have.
It's such a difference. And the more transparent we are and real, I think, and with vulnerability mixed into that, but in a confident way, not vulnerability in a defeating way, I think it makes a real difference. Rick, this has
Y-
been just so much fun to have you on, get to know you better.
Yeah,
I had not heard that story about your brother. I'm so sorry that happened, but
yeah,
I loved how your family rallied around the rock. And listeners,
yeah.
I want you to pay attention, get connected with Rick Rock. It's a great rock to rally around as you're looking at how to grow your business and how to communicate more effectively. Rick has got it down, and I'm just so thrilled that you and my good friend Greg Scher have connected and are rocking it. Excuse the
It's a steady. What I like about NFM is that the organization is a very mature, steady growth kind of company. It's not going to be a high growth like we're going to add 6 billion next year. But
yeah,
Bob Tyson is incredible as a leader, and David Silverman is incredible just as a founder to be able to just lead steady, grinding growth. And sometimes that's what you need to be able to
yep,
identify what are our goals in 2030. So those guys have done an amazing job over the last 30 years in organizing this company to a top 10, top 11 distributed retail lender, and its foundation is incredibly solid. So I
yeah.
appreciate that. Yeah.
Got to have you back. Got to have you back. I guess there's so many more questions I want to ask, but I want to respect our listeners' time. We've already gone 48 minutes, almost 50 minutes here, and but it's so rich. I really do appreciate it. Thanks so much for coming on. More importantly, I'm really looking forward to getting to know you better, Rick. Just
Likewise.
I can see why you've had the mass appeal that you have, and I can see why you've done as well as you have.
Yeah.
Congratulations on your success you have had. Looking forward to seeing a lot more of it in the future, friend. Blessings.
Thank you, David. I really appreciate it. And thank your audience for listening as well or watching.
Yeah, appreciate it. Folks, get to know Rick. We'll share this out on social media, of course. Rick will as well, but we'd love to hear your thoughts on it. Thank you so much.
Thank you so much. This was great, David.
You've been listening to Lickin' on Lending. Our passion is to bring you the latest insights, trends, and updates from the world of mortgages. So on this show, if you're a seasoned industry veteran or just getting started, it's your go-to source for all things mortgage. We hope you've enjoyed the show. We'll be back soon. Take care, and we'll see you next time on Lickin' on Lending.